Okay, so I'm going to talk about my project, which is incorporating big data into audit procedure, a framework. So actually, this presentation is different from my previous proposal because I found that based on our discussion for this semester, the application of big data has mainly like two concerns. So the first one is like how auditors could use this huge amount of data, considering they have limits, time, and budget. And the second concern is that how could we decide the threshold of the data so that we can say that this data can tell the real story. So based on that, um, I realized that, so this is the background. So we know that big data has huge value to auditors to make some advanced analytics. But like I said before, they lack of motivation to use them because they have limited time and budget. However, on the other hand, big data is very valuable to the companies and they have more motivation to collect and analyze them. So the two main areas of um, applying big data for in the business, it's marketing and management. So one example is using big data to do consumer analytics and then adjust the business strategy. And the second one is management. Actually, big data environment has changed the way that companies manage their business. So one example could be the application of ERP system because the data has become more and more, and they need a system instead of the traditional way to um, record transactions. So based on that, my idea here is that how do we use the big data that has been collected and analyzed by companies into the audit procedure. And actually, this is the figure from the paper, Big Data and Audit Evidence. So we can see that big environmental data did have influence on the corporate data. So how could we like let auditors to use those like impact in their audit procedure? So this is my research questions. And my answer is that a framework that links the impact of big data on clients' behavior to management assertions that auditors need to test. So this is a little bit abstract. So I'm going to give a framework later. But before that, I divided the assertions for management into two levels. So the first one is client's business level, which includes three aspects. So the first one is going concern, and it's closely related to cash flow forecast. And the second is operating condition in fiscal year compared with previous years. So the most the close related could be revenues and expenses. And the third one is internal control. And the other level is account level, which means the specific account in each financial statement. And based on these two level assertions, this framework is, so the big data is from clients. So I'm not gonna focus on to collect those big data because I assume that if that data is important enough to clients, they will, collect and analyze them. And so with those big data, the client will make business strategy adjustment and then implement it. So this implementation can both influence the business level assertions and account level assertions. And so this is how the impact could be. So in the business level, based on the three aspects we talked before, I would want to know, does the implementation change cash flow forecast? So if this, for example, the company may decide to invest more in the research and development based on the big data and the strategy adjustment. So if this cost on R&D will influence their significantly influence the cash flow forecast. If so, there could be some going concern. And the second one is how the implementation influenced operating condition this year. So from a general perspective, auditors may want to know how the implementation influenced the revenues and the expenses. And the last one, does the internal control adapt to the implementation, which means that does the implementation can lead to some weakness of the internal control. And for the account level, we want to know which account is related to the implementation, like the way it, like the direction it changed of the accounts. And also for the audit analytics, we want to know if the difference between auditor's expectation and actual number can be explained by the implementation. So basically, that's what I think the like how to link the big data to the account, like offer a way to use big data from client. So this is a specific example that I use to illustrate how my framework could work. So this this figure is from a paper talking about the big data consumer analytics. So as you can see, there's some consumer activities, and here is the firm source resources, and then they use big data, both structured data, semi-structured data, and unstructured data. So after that, they'll get consumer insights, and after that, here's the value creation. So after they do some analysis, they will reflect it on the product, price, place, and promotion, and then get some, sustainable competitive advantage. So during this process, what so from the auditor's perspective, what could be impacted? So from the firm's resources, you can see, considering they have those resources invested on the whole process, there could be some impact on the cash flow forecast. And then after this implementation, the four aspects, the value creation process, it could be influenced. So at the business level, there could be impact on operating condition and internal control. And for the account level, there could be revenue, advertisement expense, sales payroll, and transportation fee. Because the product process, so place basically means distribution of the products, and promotion could be related to advertisement expense and also the sales payroll. So actually, this is the example I can give for how the framework works. And so this is the contribution. I'm trying to offer a way to incorporate big data into audit procedure, and auditors have a new information source when doing audit analytics without increasing budget. And for the future research, I'm considering incorporate process mining, because I want to make sure the collection and analytics process are free from manipulation of the company. Because even though some big data itself is out of control of the management, however, during the collection and the analytics process, I want to make sure there's no manipulation. And also, also considering combining other strategies into the framework. So for example, the form 8K. So 8K is used to disclose some big events within the company, like related to board of directors. So how these strategies could reflect it on the financial statements, it's also what I'm considering. So basically, so I think I also need to specify based on different industry, how they are more likely to implement their business strategy. So yeah, that's it.
So I have a question, actually, maybe a comment rather, is not a question. I think like an opportunity for big data to be utilized is now with CSR assurance. I mean, I didn't have too much time to go too much into it, but there's really not much. As I said, there's not much regulation or guidance as to how that audit is going to happen. But there are some reports saying that there is more regulation coming for that. So I think this is an opportunity to perhaps influence before more systematic approaches to CSR auditing come out. It might be a way to contribute and influence how that can be done. So maybe a way could be by looking at what the current practices are right now, and see that there is a hole there that could be perhaps fixed by incorporating that big data analysis. And there's some specific things that can be proposed as to how this big data can be used for those specific assertions, because changing auditing right now might be more difficult, but influencing something that it's not there yet might be a bigger opportunity to contribute. So I think there is an opportunity for big data there. So it is used for ratings. It could be used for auditing. There are really ways to do that.
Yeah. Okay. Thank you.
Hi, Kathy. I just want to make sure I understand the theme correctly. So basically, the issue that you mentioned is that auditors don't know how to use the big data, right? Because it's messy, it's giant, it's hard to process. So you propose a way that auditors can actually just use the big data already being used by clients, let's say marketing department or other departments. Is that right? Like you are proposing in this way, auditors can use big data. So then my next question is, so in the current framework, this is just an analogy. So if auditors collect big data themselves, and basically they use the big data in the analytical procedure, right, where they use big data to establish their expectation. For example, okay, next year the sale will be 1 million, and then they compare 1 million with the actual, with the sales reported by the firm and see the difference. So that's the situation when auditors collect data themselves, versus in your situation, it's like auditor collect the reported data from the client as well as the data, the client, the underlying data, like big data or other data the client used to, I'm just trying to, it's like in this current framework, it's like, it's similar to I don't know the word, like the term, but it seems to me more like a recalculation type of thing. So it's like you ask manager, how do you come up with this, let's say, earnings forecast, right? And then you ask him, please give me the evidence of how you come up with that number. And then the manager say, yeah, this number is from our like business intelligence analysis from Twitter, blah, blah, blah. So it's like a walkthrough of assessing the reasonableness of how managers use the big data. So I think there is some difference there, but I think currently it makes sense. But you need to be more careful of the some of the like difference in how the big data is incorporated, and whether your proposal will actually ease some of the tensions there, because it's essentially still asking the clients their data, right? Even though that data is big data, it's still clients' data. It's not like a data from a third party or a different entity. So I'm just trying to make us think more about the.
Yeah, I understand your point. Yeah. So actually, I feel like it's a trade-off. So if auditors collect those data, they may lose the focus of how to using the data, and if this data is like reliable to get some expectation. However, if you get it from client, of course you have more focus now because they have a way to use them. But yeah, you're right. I'm gonna consider about that.
But I think that maybe, yeah.
Go ahead, Abby.
Go ahead. Oh, I was saying that actually, you can propose that like auditors can do both, right? They can use the client's big data, provided that they are comfortable with the like validity or quality of the data provided by the client, and if the auditors are capable of collecting other big data by themselves, they should do this collaboration, right, and incorporate all the information. But I think one point is correct that I'm also thinking that maybe in the future some firms or like there will be some business projects that will like focus on like processing the big data so that auditors can directly use like let's say it's like we as researchers download the data from CompuStat. Because auditors don't have that like capability. So I think this is an interesting topic.
I think there is a real need for a framework of the expanded possibilities in assurance with expanded data sources. I think where you need to work here is do a little bit more of thinking about what is really big data and how does the external and internal interact, and maybe as a product of this project, put a whole set of research questions that arise from that thinking. Maybe a paper of what research needs to be done.